SCHD has long been the king of dividend investing. But recently, there is a lot of buzz around a new type of dividend income ETFs, the YieldMax family, which uses options to deliver much higher dividend yield than traditional counterparts. We have talked about one YieldMax ETF, namely TSLY, in a previous video. And in this video, we're going to explore a unique wealth building strategy that combines the best of SCHD and TSLY. If you already own SCHD, adding some exposure to TSLY can help grow your portfolio substantially because of the monthly high dividend income generated from TSLY. By reinvesting TSLY dividend into SCHD, I believe this strategy can turbo boost your wealth building journey without adding too much risk to your portfolio. Later in the video, I will show you a projected SCHD portfolio with TSLY dividend reinvested and compare it to a portfolio without the reinvestment. The numbers shall speak for themselves. So, don't click away just yet because we've got a lot to unpack. And if you're enjoying this content, please give us a thumbs up and hit that subscribe button for more videos like this in the future. Now, let's get started by diving into one of the favorites in the world of dividend investing, SCHD, the Schwab US Dividend Equity ETF. Its objective is pretty straightforward. The fund's goal is to track as closely as possible, before fees and expenses, the total return of the Dow Jones US Dividend 100 Index. While we won't delve into the super technical details about SCHD right now, rest assured there are plenty of videos on my channel if you're into that. What's important to know now is that SCHD has earned its popularity in the dividend investing community for some very good reasons. First off, it's been delivering substantial returns since its inception. This ETF has a carefully selected collection of stocks and a smart strategy for picking the winning stocks. But here's what really grabs the attention of many investors: SCHD offers a starting dividend yield of 3.5%. It may not as high as other ETFs, but it comes with a bonus: it has massive dividend growth. Over the last 3 years, the dividend growth rate has been a robust 12.33%. Over 5 years, it has shot up to an impressive 13.92%, and in a decade, it's still standing tall at 11.32%. What this means is that investors who choose SCHD not only get access to a high-quality mix of stocks with a winning strategy, but historically, they've also seen their income grow steadily over time. Just to paint you a picture, back in 2013, shareholders were getting 25 cents per share every quarter. Fast forward to today, and investors are enjoying around 66 to 70 cents per share every quarter. Now, that's the kind of consistent growth that makes SCHD a mighty attractive choice for folks in the dividend investing game. Now, let's shift gears and step into the world of YieldMax ETFs, with a particular focus on TSLY, also known as the Tesla Option Income Strategy ETF. We won't go too deep into the technical details of this ETF as well. We have other comprehensive and detailed videos of TSLY, so make sure to go to our other videos and check those out. But let's take a quick dive into TSLY, also known as the Tesla Option Income Strategy ETF, which is part of the YieldMax family. This ETF is an actively managed fund that seeks to generate monthly income by selling call options on Tesla. TSLY pursues a strategy that aims to harvest compelling yields while retaining capped participation in the price gains of Tesla. Now, when we look at how TSLY has been performing year to date, it's had a decent 10% bump in the short term. But over the long haul, it's had its fair share of ups and downs, and that's pretty standard for covered call ETFs. Here's where it gets interesting: TSLY is currently trading on the lower end of its 52-week range. For some savvy investors, this could be a golden opportunity. Now, let's talk about dividends. TSLY recently declared a dividend of 58 cents per share. This is a bit less than the 83 cents it was dishing out the month before, and even lower than the impressive $1.07 from a while back. But remember, TSLY's dividends depend on how Tesla performs, the premiums offered on options, and how the actively managed fund handles investor funds. Investors who already own SCHD are not necessarily looking to replace their holding of SCHD with TSLY just because the later one offers higher yield. But at the same time, you really don't want to miss the opportunities TSLY presents. So here's the strategy to combine the best of the two worlds. Many investors are looking at TSLY as a way to supercharge their allocations of SCHD. By gaining exposure to TSLY, you will receive substantial monthly dividends. Whether it's $1.80, 83 cents, or even 58 cents per share, it will add up to a pretty handsome dividend yield over time. Then you invest those dividends back to SCHD, so in essence, you are reinvesting into SCHD every month. And the best part of this strategy is that the additional contributions do not cost you anything. It is all generated by the dividends coming from TSLY. Now, let's get into the numbers. In our previous video, we showed you how a $50,000 investment in SCHD can bring in an impressive annual dividend income. Now, we are going to take it to the next level with the help of TSLY. Imagine you invest $30,000 in TSLY. Given its current price of $14.33 and the most recent dividends of 58 cents per share, you can expect an average monthly dividend of $1,200, totaling around $14,000 per year you can reinvest into SCHD. In the first year, combining the $14,000 from your TSLY dividends and your SCHD, you'll earn $1,793 in dividends. In the second year, your investment grows to $67,500 and your annual dividends increase to $2,500. As you progress, your annual dividends will keep rising. So, you're not only earning dividends on your investment but also on the additional shares you've acquired through reinvestment. Fast forward to year 10, and your investment would be $269,000, and you'd be earning about $13,600 in annual dividends. You have grown your initial investment by 5 times at this point. You'll have a higher annual dividend income, and the value of your portfolio shows substantial growth. At year 25, your investment would have grown to $1.5 million, producing $139,000 in annual dividends. By year 30, with just investing the dividend you earn from TSLY, you're looking at a SCHD portfolio worth $2.8 million, and your annual dividend income is a remarkable $312,000. In comparison, if you just invest $50,000 into SCHD, without all the monthly additional contribution, your portfolio grows to $96,000 at the end of year 10. While it is still a respectively good return, it is less than half of the $269,000 you would have had you reinvested dividends from TSLY. So this really shows the power of compounding and how TSLY can be utilized to fast-track your wealth generation. Many people are wondering if TSLY is capable of generating high dividends over time given it is such a new investment option and the volatility it inherently has. That is a good point. My take on that is that even though its dividend distribution will fluctuate month by month, the payout rate is still second to none. You could invest a smaller amount in the beginning in TSLY to reduce the risk. As long as TSLY generates meaningful income you can reinvest into SCHD, you will be on the fast track to reach financial freedom. I'm really interested in hearing about your approach to investing. Are you thinking about using Yield Max ETFs to grow your portfolio of reliable, long-term ETFs like SCHD? Or do you, like us, believe in starting with a strong foundation? Please share your thoughts in the comments below. If you found this video helpful and thought-provoking, we truly appreciate it if you could support us by giving a thumbs up and subscribing. Your engagement means a lot to us. Thanks for tuning in, and for those interested in investing, check out our recent videos here.